If you're looking for a scalping strategy that works on low time frames, has a high chance of success, and is actually simple to execute, this video is for you. Today, I'm going to show you a strategy I call the sweep and reclaim. It works on any asset, any market, and once you see it, you're going to start spotting it everywhere. And to prove it works, I'll walk you through real examples so you can trade it yourself after this video. Let's dive in. Here's what makes this strategy powerful. It's built on two things I've already taught you: liquidity sweeps and fair value gaps. On their own, they're useful. But when you stack them together, that's where the magic happens. Let me start with something every single trader has been through. You find a support level. Price has bounced off it a few times, so you think, okay, price will probably bounce again. So you buy at the support level. You put your stop loss just below it. Makes sense, right? That's what everyone is taught to do. But here's what actually happens. Instead of bouncing, price dips just below the support level, hits your stop loss, takes you out, and then, immediately, it reverses and goes exactly where you thought it would. Every trader on earth has felt this pain. That dip below support wasn't random. That was a liquidity sweep. Price went down there on purpose to grab everyone's stop losses before moving up. And this strategy turns that pain into your entry. So let's break this down into simple steps. Step 1. Mark your liquidity level. A liquidity level is just a point where price moved toward a level, then pivoted away from it sharply. That last point before it turned, that's your liquidity level. You just draw a line there. These are the spots where everyone's stop losses are sitting. One rule: the level has to be obvious. If you have to look hard to find it, it's not a good level. The best ones are the ones every other trader can clearly see too. I like to mark these on the 15-minute up to the 4-hour chart. Step 2. Wait for the sweep. This is the manipulation. It's price breaking your liquidity level and then quickly reversing. So we wait for price to break below the liquidity level, like this, and then sharply reverse back up. That dip below the level and the snapback, that's the sweep. That's our signal that something's happening here. Step 3, and this is the most important step. We look for an inverse fair value gap. Don't worry, I'll keep this simple. Quick reminder, a fair value gap is just an area where price moves so fast it left a gap behind, an imbalance. I've got a full video on these if you need it. For now, just know it's that gap zone right there. Now, an inverse fair value gap is simple. It's when price breaks through that gap and closes on the opposite side of it. So the gap that was acting one way flips. When price breaks through it and closes on the other side, that's your inverse fair value gap, and that's your confirmation. So let's recap what we have. 1. An obvious liquidity level. 2. A sweep of that level. 3. An inverse fair value gap forming right after. When all three of those line up, that's when we take the trade. Step 4. The entry. This part is simple. You enter at the close of the inverse fair value gap. Your stop loss goes just below the gap, and your target is 2 times your risk. So if you risked $50, you're aiming for 100. Or, if you want a bigger move, you can target the liquidity sitting at the highs instead. Now let me show you this on a real chart. We've got our liquidity level here where price reversed before. Price comes back down and sweeps below it. There's our manipulation. Then we get our inverse fair value gap as price breaks back up and closes above it. That's our entry. Stop loss below the gap. Target at 2 times risk. And price moves right up and hits the target cleanly. That's the sweep and reclaim. Real quick, I want to tell you about something that's perfect for anyone still learning to trade. It's called Alertsify. And here's why it's different. Every trade on the platform is verified straight from the broker. No fake screenshots, no made-up results. The second a pro trader takes a trade, it copies into your account automatically. In under a second, you don't have to do anything. Yes, the pro plan is $1,997, but most people make that back within the first month just from copying the traders on the platform. So you're learning and making money at the same time. Link is in the description. Go check it out. Back to the strategy. This works exactly the same in the opposite direction. Here, price pushes up into a liquidity level at the highs. Then it wicks just above that level and rejects back down. There's our sweep, this time at the highs. Then we get our inverse fair value gap as price breaks down and closes below it. We enter a sell, stop loss above the gap, target at 2 times risk, and price drops straight down to the target. Same strategy, just flipped. So let's bring it all together. Mark an obvious liquidity level. Wait for the sweep. Find the inverse fair value gap. Enter at the close. Stop below the gap. Target 2 times your risk. That's the sweep and reclaim. Simple, repeatable, works on any market. Now go open your charts and look for this setup. Mark your liquidity levels. Wait for a sweep. Then look for that inverse fair value gap. Practice spotting it before you trade it live. Drop a comment below and let me know if you want me to break down more strategies like this one. And if this made the strategy click for you, hit subscribe. Every week I break down one concept just like this. Simple, clear, no fluff. See you in the next one.